Jeni Browne. Welcome to our latest in our series of Meet the Lender conversations. And this time around, I'm delighted to be joined by a gentleman called Zou, who is National Account Manager at Quantum Mortgages. Now, I was very, very keen to have Quantum come along and speak to us because they are I think probably one of the less known buy-to-let lenders that we deal with, because they're a relatively small and quite niche-y lender, actually. So what I mean by niche-y is that they're not a cheap lender, but they are a lender who can actually really kind of pick up the pieces on cases that other lenders simply aren't looking to entertain. So they have some really amazing pieces of lending policy which genuinely are unique, and so I really wanted to be sure to bring Quantum to you guys so you can have a listen and see whether they may be able to help you either now or in the future. Zou, thank you very much for joining us today. It's really, really lovely to see you and have you along. And I think, you know, let's be honest, there's going to be people watching this who are thinking, who on earth are Quantum Mortgages? So unusually, I don't normally ask lenders to do this, but because you are a fairly, I say small, but I don't mean that in a derogatory way, but you are a relatively unknown lender. What I wanted to do before we get into the kind of nitty gritty is just talk a bit about actually Quantum more broadly so people actually understand a bit about the background of the business.
Okay. Yeah, absolutely fine.
Thank you. So I guess, like, who are Quantum?
Perfect. Thank you very much. So Quantum Mortgages coming up to its fourth year anniversary. So it's a lender from its inception that's been a specialist buy-to-let lender within its space. And more recently, we've gone live with bridging. So again, we feel that bridging obviously complements what we necessarily can then exit on from a buy-to-let standpoint. It's a lender that was created by our CEO, Jason Neal. We've obviously got our ownership structure where we've got AB carve-out, a massive investment fund that obviously then has a huge stake in Quantum as well. Being a securitized lender, we obviously do have different little funding lines that then can enable us to have the flexibility that we do have when it comes to our criteria. So one of the unique kind of selling points in terms of when brokers like yourself come to us with your clients' needs is where, you know, if it doesn't fit one product, then potentially we've got an alternative one, because obviously the flexibility is there to say, okay, this one doesn't like it, but this one does. Fantastic. Then we can obviously go from there. But yeah, it's really refreshing necessarily working with a lender that implements changes much more quicker than, let's say, the larger financial institutions where it's got to go and get signed off by multiple different departments. Here, literally, it's where, you know, I can go sit down with the CEO and then within a week, the change gets implemented, to be fair. So from my perspective, yeah, really, really refreshing to work for an organization like that.
A lender without lots of political red tape. Amazing. Just to circle back for a moment, so you mentioned about securitization, and just to kind of explain, because I think not everybody understands about what that means. So for those who are interested, essentially there are lenders who are lending their own money. So by this, we're talking about really high street institutions like the Coventry Building Society would be one, Santander. So people who take savers' money, they have the money in-house and they re-lend it back out. And then we have lenders who don't really have their own money as such. A Quantum don't have millions and millions of pounds that they're lending out. They have relationships with various funders. And the benefit of that is that actually they're not bound by one set of criteria. If they have multiple funders who have different credit risk appetites, it means that lenders like Quantum can kind of ricochet between lenders to or funders rather, to try and find a solution for the client that's kind of in front of them at that moment in time.
Yeah, absolutely. And I think, you know, we'll delve on it obviously as we go through with our discussion today, but there's definitely areas that we've targeted that we definitely felt that was, underserved within the market. And, you know, areas that do require the relevant funding, but not at extremely ridiculous kind of rates, to be fair. So you can still be competitive and you can still, you know, service that kind of niche area. So so from our perspective, it's just, you know, listening to what investors have to say. We obviously go to a lot of these national landlord roadshow investment shows. I know you guys obviously play a prominent part in terms of being present there. And it's always nice to actually hear the end customers' kind of feedback. rather than, just, again, we both work in this sector. It's always good when you can hear brokers' feedback, but then there's nothing more refreshing when you actually hear what the end client's got to say. What are you guys finding? What are you finding most frustrating? Well, broker said we could do this. It got halfway through underwriting and then it just fell out of bed. Why? What was the reason for that? Oh, because of this or that. So those are the kind of things where I think from our standpoint, we've targeted. And thankfully, I would say as a non-bank lender, we're probably the fastest growing one in the UK in the last 4 years. So from that perspective, it clearly shows what we're doing is working. But again, it's not necessarily wanting to sit on our laurels. It's, again, how can we scale up? So that's where bridging's come in. I'm sure before we know it, something else will come in. So from that perspective, yeah, I think it's always good when you've got lenders that are just continually trying to evolve, especially around policy and criteria.
Fabulous. And I do actually, so first of all, knowing your criteria, I can give a bit of a spoiler alert that you guys do have some really unique criteria, which is amazing. And actually, you touched on something just now, which I found really interesting, which is that you actually go out and try and speak to your end borrowers or potential end borrowers. There are so many lenders who actually are not dealing or speaking to the people that they're actually lending money to in terms of serving that community. So absolutely congratulations to you guys, and you can see by the things that you guys do that are different that you really are having those conversations. So well done. So let's get into it. First question we like to ask people when they're in the hot seat is who would you say is a typical quantum borrower?
Typical one at this moment in time, I would say, is the very experienced portfolio landlords. So the ones that probably have, on average, when I think to our kind of back book of clients, on average, most of our clients have at the bare minimum 12 plus buy-to-lets. It's not to say that we don't look at first-time buyer, first-time landlords. Absolutely, we do. But predominantly, a lot of our products require a minimum amount of landlord experience or a minimum amount of property ownership. I think from that perspective, that's where we've obviously got those kind of funding lines to become more comfortable, because where I can present to them and go, Jeni's got 30 properties here, but we now want to go into the assisted living space. They're like, well, clearly this landlord knows what they're doing. If they can scale up their property portfolio to 30 plus, then these are the type of people that we want to be lending to, rather than, Joe Blogs, who basically has the one buy-to-let, but then arguably they're umming and ahhing in terms of, do they actually understand that sector? Do they really want to go and get a 15-bed HMO? Do they know how to manage that? That's not the same as managing a bog standard single dwelling. So from that perspective, I'd say that's where, we've become very comfortable from that standpoint. But predominantly that's the normal kind of customer that we have on our books.
Brilliant, thank you. And I'm sure you're quite excited for this question, because this is where you're going to really tell us all the great things that Quantum can do. So what would you say are your top 3 USPs?
Oh, top 3 USPs. You see, this is now you're putting me on the spot, Jeni, because like with the evolving criteria, I'm like, oh God, what's flavour of the month? Look, from when Quantum started, I think the thing that probably surprised brokers, customers, even to this day, is our day one remortgage policy. So to elaborate on that, if, let's say, for instance, you've got a client that goes and purchases a property at auction, definitely below market value, carries out no works to the property whatsoever, but feels they've got an absolute bargain of the year, but wants to then do a day one remortgage within 24 hours of completing on that purchase, Quantum will lend on that open market value immediately. So again, traditionally, it's always been the case where if you take that to the more kind of high street lenders, they would insist on 6 months ownership of that asset before they'll even look at a remortgage at the open market value. So we've got loads of instances where we've done interfamily purchases, so son buying the properties from mum or dad, they sell it at half the price to their offspring, and then literally straight away we want to do a day one remortgage on that £500,000 asset that we just bought yesterday for £250,000. Absolutely fine from a Quantum standpoint. So the day one remortgage piece, I can't emphasize enough, is a massive area. Secondly, our appetite towards those that want to let their properties out to assisted living or vulnerable tenant providers. In all honesty, again, I appreciate you'll get a hell of a lot of people sitting in this delightful hot seat saying that they are the number one of all the number ones, but there literally is no lender that can come close to us in terms of our appetite and pricing for that specific sector. So we'll allow landlords that want to, let their properties out to providers that either are CQC registered. So when I say CQC, Care Quality Commission. So some lenders will insist that the provider has to be on that list, which limits you to a degree. But we don't even require them to be CQC registered. So you've got literally a whole of market approach where you can either go directly to the council, housing associations, charities, even with some of the bigger providers and, government-backed organizations like Serco, Mears, Clear Springs. We're absolutely fine with that. Sometimes people would then come to me and go, yeah, but Zoo, I tried to get this through with this lender, but then when they found out that the end tenant was either an illegal immigrant or tenants with disabilities that require 24/7 care, they didn't like it. We've got no restriction whatsoever. So that enables then, the end customer to go, fantastic. This gives me a massive negotiation tool now to speak to just about anyone to get the best terms possible for my property. And the pricing as well, to be fair, within that space is extremely competitive. I mean, our standard pricing for us up to a 6-bed HMO with 24/7 carers on site will be as low as 5.99%. Now, when you put that across the market, 5.99 is just about probably mid-range for just a standard HMO, let alone one that's got, 6 vulnerable tenants in there, could be kids that require 24/7 supervision. So, the market in that space is humongous. And that's where I've seen a massive uplift in business from our standpoint since the turn of the year. And funny enough, that came off the back of what we just discussed a short time ago of going to these kind of landlords in, roadshow events where we were meeting these type of portfolio landlords. And we're like, what's your biggest kind of issue at this moment in time? And they're like, Zoo, with the renters reform bill coming into place, we now want to lock in these 5-year, 7-year corporate leases rather than, worrying about whether Mr. Smith is going to pay the rent, this, that, and the other. But we're struggling to find lenders that can give us competitive pricing as well as serve that market. So, we saw that again as a securitized lender and thought, well, what is the risk here? We've got experienced landlords. We've got a sector there that has governments, backing them, certain organizations, this, that, and the other. So what is the risk? So we looked at it from a logical kind of perspective there. And yeah, thankfully, that's been a huge area for us.
Before you go to your third USP, just to stay with that one for a second, because
yes.
I get asked this question a lot, and I think I know the answer, but I'm interested in your view.
Mm-hmm.
Why is it that other lenders don't like those types of tenancies?
I mean, to be fair, I think what tends to happen is predominantly, I think there's a mixture of things. I think some of the bigger, larger institutions look at it from a legality standpoint. Is there complications or even more complications that come involved when it comes to if we had to repossess the property? I can tell, having spent months with some of the biggest partners of the law firms, that necessarily isn't the case to a degree. I think a lot of the time as well, we've also got to look at it also from a media standpoint. Are these big kind of institutions, do they want to put themselves in that position where you can only imagine it, front page of a national newspaper, we've just made these guys homeless or whatever. So I think there's that very, very fine line, to be honest. But I can promise you now, based on conversations that I've had at, when we go to lender events, this, that, and the other, it's an area that's attracting a hell of a lot of attention, especially now with the renters reform bill. I think now it's forcing those large institutions to go, we can't look past this anymore. If this is going to become the thing now that's going to become even more common for these professional landlords, then we're going to have to find a solution here. So I think, do I see Quantum being the only lender that has this criteria within the next 2 to 3 years? Personally, I don't. I think there definitely will be more people coming into that space. We're just, I would say, the very fortunate one where we've seized the initiative and gone, right, there's a market there. There's very few lenders in that space that truly understand that sector. Let's educate ourselves. Let's get the experts in. Let's educate the underwriters. And then from that point, we've obviously kicked on from there, to be fair. So, a massive win for us, and long may that continue.
Brilliant. Thank you. Thank you. Sorry, I interrupted you.
It's
You may
all
go
right.
on to your third USP.
Third USP. I would say without necessarily making sure that we definitely do look after. I mean, look, a lot of the time with specialist lenders, when it first went live, they were all, harping on about limited companies this, limited companies that. I think just about every buy-to-let lender now is doing limited company. Even the high street lenders have now stepped into that space and now started to accept limited company applications. Where I would say we then have our kind of, third kind of niches, our appetite towards expats and foreign nationals. So there will be lenders that will have that appetite, but predominantly, or should I say traditionally, a lot of lenders would concentrate on where that applicant's passport is from rather than where they're actually residing. So they'll go, no. If it's got that, that's high risk, this, that, and the other. Quantum stances, if that person is residing in a country with a Basel Risk Index score, so when I say Basel Risk Index, there literally is like an index calculator that customers can revert to. You can literally put in Basel in Google and you can see a list of countries. So if it's in a country that's got a score of 6 and under, we'll lend to that applicant, no issues. So even if that person necessarily has a nationality from a country that traditionally would make it harder for them to obtain lending, but they're now residing in the States, the UK, France, Holland, we'll go, right, from a risk standpoint, they're residing in Holland. Holland's got a score way below 6. Absolutely fine. Let's proceed from that perspective. Then when you add in the fact that Quantum will even allow, even if there's a UK-based applicant on the application with foreign nationals, even though, let's say, for instance, all 3 of the other applicants or customers, I should say, are based overseas, but, mum, dad, brother, sister is permanently based here in Britain. They've got the experience. If they're on the case, they will get a UK buy-to-let rate. There's no other lender that will necessarily have usually that appetite because they'll go, no, you've got 3 other foreign nationals there. You've got to then go on the higher priced kind of product from that perspective. So is that manual underwriting approach that we do take, that common sense kind of thing where we're like, okay, have we got a UK-based person here? Yes, we do. Okay, even though the other 3 are based in Dubai, earning fantastic wages, but we've got dad, mum, whoever on the case here. Yeah, let's give them that lower rate in the 5s rather than a rate in the 7s. So again, it's that kind of, common sense kind of approach that we get. But yeah, those 3 I would say are enough to keep me busy on a daily basis, I can assure you.
They're very, very good USPs. Actually. I mean, I suppose what I would say is a lot of our guests who come on, they give us USPs, and it's like, yeah, I mean, it is a USP, but it's not totally a unique selling point. It's a fairly unique, whereas actually you've got some genuine, only you guys do this at the moment, which is fantastic.
Yeah,
so thank
exactly.
you.
Right.
Okay, next question then would be, you obviously like saying yes to people. That's certainly what I'm hearing at the moment.
Yes.
Why do you guys decline applications? Like, is there a particular thing you just won't do, or where does it go wonky?
Honestly, from our standpoint, our appetite when it comes to properties is probably as relaxed as it could be with any lender. So it's very, very rare you will ever bring a property to Quantum Mortgages and they'll decline it on the basis of the property, because we've got products that cater for just about anything. Ex-local authority flat on the 20th floor of a concrete build construction with no lift access, deck access. I could still give you terms on that. So we're never going to have problems from that standpoint. I would say as a lender, are we a lender that caters for applicants that have heavy adverse? Absolutely not. And that's probably where, the cases that don't go through are purely on that basis. So, traditionally, I think a lot of customers, brokers will look at our appetite when it comes to properties and go, my God, if they're doing that, then surely they'll do 5 CCJs and 5 defaults, this, that, and the other. And unfortunately, that's not the case, which, again, to be fair, as a national account manager, do I wish that we could do everything? Absolutely. Of course I do. But at the same time, when I look at where we are 4 years into our journey, we've got to that stage because we've got quality portfolio landlords on our back book that we know service our loans on a monthly basis. And that's off the back of underwriting people that don't have that kind of adverse kind of background, to be fair. Look, everyone can make mistakes. So if you came to me and said, So I've got someone that's just missed a mortgage payment in the last 12 months. He's had a few statuses on a few utility accounts. Could you look at it? Absolutely. Everyone can make a mistake. So it's not to say that we're going to absolutely throw them out altogether. But yeah, those with heavy adverse, I'd say, unfortunately, is not something that we can necessarily cater for at this moment in time.
Okay, so that's good. But so you can accept, because even if you accept a missed mortgage payment in the last 12 months, you're much more open to this kind of stuff than like 99% of other lenders. That's actually still
for sure. Yeah, 100%. I don't think, to be honest with you, you can be a specialist lender within our space without having some kind of appetite towards adverse. Because traditionally, then you, Jenny, would be like, well, Zoo, why aren't I going to the high street then with this customer? So naturally, I think you've got to have some. But of course, there's other lenders within our space that have much more heavier appetite to adverse. But then when it comes to properties, not so much so. So, you know, stuff based on what they're telling their valuers when they go out to value properties, they go, yeah, no, above an Indian takeaway shop, now we're not touching it. Oh, there's a pub across the road. Yeah, we don't like it. We'll do that all day, every day. So it's that fine balance. I think the majority of professionals like yourself that I speak to on a daily basis, as well as customers, they would prefer to have lenders that allow them to be able to get more mortgages on them type of properties than someone that's got heavier adverse, to be fair. So so that's the kind of space that we've got ourselves into, you know, within the specialist lending area.
brilliant. Thank you. Okay. So people are watching this and they're obviously thinking, my God, Quantum sounds incredible. They lend on all types of property with all types of tenancy agreements. Their rates are sub 6%. I've even got a missed mortgage payment. They're still going to lend to me. I'm going to submit an application to those guys. How can we kind of help them ensure that their application will go through smoothly with you?
Okay, so I think this is a major plus point, both from a broker as well as a customer standpoint. The first thing that we do when that application first gets submitted, we'll send out 2 links to the customer. So there'll be an ID link and there'll be an open banking link. If they were to complete both those links, the arduous experience that they may have had previously before, where they've got to then go and provide manual copies, where the brokers then got to certify it and this, that, and the other. By doing those 2 virtual links there, it eradicates all that documentation from a broker standpoint immediately. Within 24 to 48 hours, all that information gets flooded back to the underwriter. And subject to what the SLAs are now, thankfully, it's 24 currently. So I've picked a fantastic time to jump onto this call. But, you know, that can always fluctuate. But realistically speaking, our SLAs don't exceed anything more than 48 hours, if I'm really honest with you. And that's where we're, you know, getting absolutely slammed. So by completing those 2 links there, it avoids the back and forth that I think customers find very frustrating when their broker has to revert back to them and go, oh, but I need this. Oh, but they've asked for this. So by doing those 2 links there, that literally will remove all documentation requirements altogether. You know, it goes without saying, if a broker is reaching out to the client as well, if you can get that information back in a prompt manner, it just speeds up the process. You know, a lot of the time, I think the biggest frustration for a customer is, why is it taking so long to get to valuation stage? Well, I've waited 2 weeks for you to explain to me why you missed that payment on the British gas bill. It's just stuff like that, to be honest with you. So, you know, speed, of course, everyone wants speed, but I think more importantly, they want to have that kind of assurance before they go and fork out, you know, a grand or £1,500 on a valuation. Is this lender happy with my profile, with my circumstances? So that's the other thing that we also have in place is we don't instruct any valuations until the case is fully signed off at underwriting stage. So then the customer sits back with the knowledge of going, as long as this valuation comes back and it stacks up, this is what I'm getting, you know, LTV wise. So that also gives them that added assurance. Because I think, you know, when you speak to some end clients that have those kind of deep scars, a lot of them are like, you know, I forked out, you know, £2,000-3,000 on this large HMO. I thought everything was fine. And then at the last hurdle, oh, but they had a problem with, you know, something that I did 7 years ago. So they declined the case. You know, even me, if I put myself in that client's situation, I feel exactly the same as well, to be fair. So it's just having that human approach. You know, we're all we're all humans at the end of the day. Not everyone obviously feels passionately about their money that they work extremely hard for. So you don't want to be in a position where you're just saying to them, yeah, it's only 3,000. No, it's not only 3,000. That's a lot of money for a valuation. So you want to instill as much confidence in that customer to go, yes, everything is fine. You've given us everything up front. Yes, you did have some, adverse past with a few missed payments, this, that, and the other, but we've signed that off. So now we're ready for valuation. So as long as the valuation comes back, as you have stated that you believe the property to be this value, this, that, and the other, then, rest assured that an offer then follows suit a week to 2 weeks after. So, yeah, so that's my kind of holistic zoo advice to the customer.
Thank you. And I just want to ask you a bit about the open banking thing, because there was a lender a few years ago, I can't remember who it was now, but they kind of were the first lender that came to the market, and they were saying we're going to use open banking to underwrite mortgage applications. And I think nearly every single one of our clients were really uncomfortable with the concept of it. Because maybe they didn't understand it. Maybe the world has moved on a bit, because this was a few years ago. But could you just briefly explain to us how open banking works? And I think, as importantly, what protections are there for the borrower to ensure that, in 3 months' time, the underwriter at Quantum isn't like going back into their bank account to see what they've been spending their money on or something? Because I think people are genuinely sceptical about this.
Yeah, no, for sure. I mean, it's one of them ones where we do give the client the option of either or. So you will come across the traditional clients who, we're talking about the portfolio landlords that have gone from the days of when they had to fax stuff to their brokers and to their solicitors. And
good old days, as I call
it. Listen, even if I tried to talk even my own dad into open banking, he'd be, oh, no, you do come across that. But yeah. But does it give the lender the absolute deep dive into your financial affairs? Absolutely. But it's that famous saying, if you've got nothing to hide, then what's the issue? And to be honest, in today's day and age, honestly, what is there that a lender or any financial institution doesn't already know about the customer? Like, you look at when people now register for, reports from like Check My File, for like 15 quid a month, you've now got one report that shows you where 3 agencies are reporting on you on a monthly basis. Where are they getting that information from? Clearly from the banks, from the utility companies, from this, that, and the other. So when you actually educate the customer on that point and go, to be honest with you, what they're going to get is no different to what technically they're already seeing behind the scenes on your credit report, this, that, and the other. It's just the fact that it saves me from having to ask you, Mr. Customer, that because the banks no longer send out your paper statements like they delightfully used to, it's mostly all online banking, this, that, and the other. Some of lenders, I mean, we don't, but some lenders do insist on the paper copy. So that means you having to go into branch and ordering it. Some banks will even charge you for that, this, that, and the other. By just doing that link there, that's it. There's no paper statements. There's no need for you to then to go and fire me over your passport, your driver license. Because funny enough, there are some customers that even don't feel comfortable even sending over IDs to a degree, because they're like, oh God, no, of course, if you're a broker that's looked after them since they were 18 years of age, they see you as family. They're going, no, yeah, no problem. Here you go. No issues there. Some other customers, they might have had a bad experience. Someone lost a copy of their passport or lost this, and they're like, well, who's got it? Well, what's happened with it? This, that, and the other. So to a degree, yes, I can understand from one side where some people might be like, yeah, I don't really want to open up my affairs like that. And with clients like that, look, if they want to give us the manual stuff, absolutely fine. So it's not
they sign this link, and so that means the underwriter can essentially get into their bank account and look at their statements only. So it's not like they can start transferring funds between. You don't gain control of it. So it's literally just the ability to view someone's bank statements online. Is that essentially what it is?
Literally, all it is, bank statements, but even all their banking affairs for up to the last six years. So literally, if there's any conduct that wasn't showing up on their credit file, it would pull through on their own open banking.
Right. Okay.
So there are times where someone will go, where's that default come from? Well, clearly it's showing up on your open banking, so it was there. So that's the other thing as well. Some people are of the assumption that on their credit report, it's the be all or end all. But there's many, many times where one credit agency may show some adverse, but then the other one doesn't report it.
Yeah.
So I think from that lack of transparency, that's where the open banking is very clear and thorough to go, this is what the circumstances is, or this is what occurred. Are you fine with it? Absolutely. Okay, crack on. But again, you know, if those that don't feel comfortable with it, no one's forcing them into that corner to say, well, this is a mandatory thing. I think looking at the way technology is going, you know, you've got lenders now looking into AI, this, that, and the other. Do I think open banking will definitely become a norm, maybe even a mandatory norm in the future? Personally, I think it will get to that stage. But for now, yes, you know, you can choose. So, you know, if you want to speed up the process, there is that. If obviously you're content with things being assessed on a manual basis, then by all means, you know, we can accommodate it as well. That's not an issue.
Beautiful. Thank you. Right. We are now moving on to the kind of broader PRS. And one of the things that we get asked often is, with the changes coming in under the Renters' Rights Bill, are lenders going to start changing the way they lend money? Are they going to have less appetite? Are they going to be more cautious? I suspect I know where you're going to sit on this one at Quantum, but I'm going to let you answer that. So is the Renters' Rights Bill or any other legislative changes that are coming, is it going to change the way that your credit appetite looks, do you think?
Probably not as much as it will the big banks, if I'm really honest with you. And again, you know, you touched upon it at the very beginning of our call, where by having the kind of agreements that we have in place with our funding lines, that's where we can then obviously see what, you know, kind of flexibility each one has. What appetite do they have? Do they feel more concerned in one area, so therefore do they want us to be more stringent to cater for certain types of landlords compared to others, this, that, and the other? But 100%. Do I think the biggest shakeup I think it's going to have, in all honesty, rather than even from a lending standpoint, I think it's going to be on the perceptions and mindsets of landlords themselves. You know, there's going to be a hell of a lot of landlords that are going to be revisiting their existing kind of tenancy arrangements that they have in place, even the type of tenants that they have. And they're going to have to make that commercial decision. Is this where I want to be? You know, I think there's a lot of scaremongering in the industry where it's like, oh God, this is going to come on, everyone's going to sell up, you know, this, that, and the other. I don't think that's going to be the case, to be fair. I think it's probably bringing about a very important kind of question that should be challenged with a lot of landlords in the spaces. This is now going to be the minimum requirement that you now need to uphold to be a landlord in the United Kingdom. End of story. This is where it is. These are now going to be your the tenants' rights. So will it clean up, shall we say, some of the more kind of rogue landlords that there has been in previous years? Absolutely. But I don't think you will ever find a lender, a broker, even an end customer that will ever complain and go, oh, no, we still want to have them in the industry. Of course not. You don't necessarily want to have that. So I think it's definitely going to have some positive impacts, but there's going to definitely be a lot of challenging questions, I think, that end customers need to obviously ask of themselves to say, you know, is this something that, you know, one, I have the time, the capacity, the money to still be involved in within this sector? And if the answer to that is yes, then, you know, they've got options. The most important thing is to the customers to emphasize, and I can't emphasize this enough, you will have options. Like, don't think that this is it. Sign on the dotted line, you're done. No, you know, there's going to be flexible options out there. You've got corporate-let agreements that then you can take advantage of. Some of those agreements are not embedded with the Renters Reform Bill. So then all of a sudden you're like, okay, interesting. Let me explore that. So that's why I do think that from a bank lending standpoint, I see a lot of lenders now that will have to take a different stance to corporate lets. You know, will they have to? They don't necessarily have to have as such a relaxed approach as we do, but they're definitely going to have to change their stance, to be fair, to continue lending at the level that they're currently lending, to be fair. That's where I probably see the shift in lending behavior.
Brilliant, thank you. And the last question for you today, Zou, is just more broadly, what's your kind of view on how the future looks for the private rental sector?
I think there's the most important thing is you know, for the one thing that we're blessed with in today's world, with social media, with the internet, this, that, and the other. Yes, of course, you will get a lot of people that will go, oh, you know, there's a lot of ill information on there, this, that, and the other. No. The one thing I'll always emphasize to the end customer is do speak to professionals. Do go to a broker. Don't listen to a YouTube seminar and think, oh, that's it, I've cracked it. And then that's it, you go running off and doing some madness. No. That's not what Zou's saying whatsoever. But is there opportunities there? Absolutely. Will there be a hell of a lot of landlords that are looking to get out of this space for one reason or the other? There could be. So is there going to be opportunities there for people to acquire properties at below market value? Most certainly. And then when you've got lenders like us that enable you to then lend off that open market value within 24 hours, that's huge financial opportunities there. One thing that I haven't touched upon, which again is a unique one with ourselves, and also to educate the customers that this is a feasible kind of thing to do, share purchases. So people are like, oh, Zou, you know, what do you mean? Like, can you elaborate on that? So there's opportunities there where even if the limited company that has the properties within it, you can actually purchase the shares of that company and therefore only pay for the transfer of shares rather than the stamp duty all over again. So you've got experienced landlords that are looking into that space, but you've also got even first-time landlords that go, oh, wait a minute. So you're telling me I can go and purchase dad, my uncle, my auntie's portfolio and just purchase the company itself rather than the traditional move it from one company to another. So therefore I'm going to pay stamp again. They're going to have to pay corporation tax, this, that, and the other. So there's loads of quirky ways in terms of how to acquire assets now. So that's why I would always say is, you know, there's nothing more powerful than sitting down with your broker. You know, your broker knows nothing. There's no one better than a broker to tell you what the current trend is in the market, because they're getting it in front of their desk. They're getting individuals like me visiting their office and telling them what is coming on our table. So then we expect them to then go and spread the word. But you know, any ideas that you have, I'd never say any idea is a rubbish idea. Put it to your broker and I promise you they'll find a lender that will accommodate that concept. You know, oh, but what if I wanted to do this, but then, you know, I don't want to carry out works, but then I want to get a 7-year lease to house, you know, these people. No problem. Do you know what? Jeni will go, I'll give Zou a call. So it's just, it's just one of them ones. But, you know, we've been here before. You know, back in 2008, everyone thought it was game over. You know, it's never going to happen again, this, that, and the other. And you look at the market now compared to then, you'd be like, it's blown up. Property values are at the highest that it's ever been. So there will 100% be opportunities, but will it be straightforward? No, which is why, again, I can't emphasize enough, they've got to work very closely with professionals like yourself that can handhold them through that process. But yeah, there's definitely, you know, opportunities there to be taken advantage of.
Lovely. Thank you, Zou. I really appreciate that. Yeah, look, I have never met a BDM who is more enthusiastic and passionate about the company that they work for and the offering. And I'm really, really excited to see where Quantum go with things in the future. And actually, if people are watching this thinking, you know, why can't a lender start doing X, Y, and Z? It certainly sounds like Zou is open to a conversation about these things, you know, so actually it's always worth.
Jeni, hide my number, Jeni. Jeni, hide my number.
Zou, thank you so much for joining us. Really appreciate it.
No problem. Thank you very much.
So, wow, what an amazing lender. How many exciting things they're doing and very, very different from a lot of their competitors. So really great that Zou was able to join us today. If you have any questions on any of the topics that we've discussed, you're always so welcome to give us a call, 0345 345 6788, and we'll continue recording these with as many lenders as we can. But if there is a lender you would like to see us speak to, or if there's any questions you'd like us to start including in these conversations, just let us know. Anything we can do to make sure that this is a really useful session to you. We'd love to hear from you. We'll see you again at our next Meet the Lender video.